Good morning, everyone. Thanks for joining us as we take a closer look at something that touches every Australian's life, whether you realize it or not. Let's talk about banking, something that impacts us all. From the moment you tap your card for a coffee, to paying your rent, or saving for your first home, banks are woven into the fabric of our daily routines. They're not just places to store money, they're the engine rooms that keep our economy running. Banks are the heart of our economy, lending to families, entrepreneurs, and big companies. They help people buy homes, support small businesses to grow, and provide the financial backbone for major projects that shape our cities and communities. The health of major banks like NAB is a key indicator of how Australia is doing. When these banks are strong, it usually means businesses are thriving, people are employed, and the country is moving forward. But if they struggle, it can be a warning sign for the whole economy. When NAB releases its annual report, it's not just for financial experts. It's a snapshot of our economy. These reports are packed with information about how much money the bank made, what challenges it faced, and how it plans to grow in the future. These reports reveal if businesses are growing, if people are saving, and if the bank is strong enough to weather challenges. They show us trends in lending, savings, and investment, and help us understand whether Australians are feeling confident or cautious about their financial future. For everyday people, it can affect mortgage rates and job security. If a bank is doing well, it might mean lower interest rates, more job opportunities, and greater financial stability for families across the country. That's why we're diving into NAB's 2025 results today. Understanding these numbers helps us all make better decisions, whether you're running a business, managing your household budget, or planning for the future. We'll break down the key figures, profits, challenges, and what it all means for you. We'll look at what's driving NAB's performance, what risks are on the horizon, and how these results might shape the year ahead for Australians everywhere. Our goal: cut through the jargon and get to the heart of the story. We want to make sense of the numbers so you can see how they connect to your life, your job, and your community. What does NAB's report card say about the year that was and the year ahead? Are we heading for growth, or should we brace for tougher times? These are the questions we'll answer together. So, let's get into the details and discover what NAB's 2025 results really mean for all of us. Let's start with the headline, profit. For the year ending September 2025, NAB reported a cash profit of $7.09 billion. That's a huge number, but it's slightly down from last year's $7.10 billion. Think of it as running a marathon and finishing just a hair slower than your best time. Profit growth has stalled, and that surprised some analysts who expected a bit more. This small miss can make investors nervous, hinting at tougher conditions. Still, a $7 billion profit means NAB has a strong financial cushion to keep lending and investing. It also allows the bank to reward shareholders. While growth has paused, NAB remains a solid, powerful institution. The bank is navigating a complex, changing economic climate. Now, let's demystify net interest margin, or NIM. This is a crucial concept in banking, and understanding it can help you make sense of how banks like NAB make their money. NIM is often seen as a key indicator of a bank's profitability, and it's closely watched by analysts, investors, and the banks themselves. Put simply, NIM is the difference between what the bank earns from loans, like mortgages, business loans, and credit cards, and what it pays out to customers who deposit their money in savings accounts or term deposits. Think of it as the bank's spread, or the gap between the interest income it receives and the interest expense it pays out. This year, NAB's NIM rose slightly to 1.74%. On the surface, that sounds like good news for the bank, but it's important to look deeper. The increase was mostly due to a one-off boost from its markets division, which isn't part of the bank's core, everyday lending and deposit-taking business. If you strip out that temporary gain, the underlying or core margin actually shrank. This means that, in the bank's main business, it's earning less from the difference between lending and deposit rates than it did before. Why is this happening? Fierce competition for deposits means banks are having to offer higher interest rates to attract and keep savers. At the same time, the cost of borrowing money on global markets has also gone up, squeezing margins even further. Meanwhile, competition for home loans is just as intense. Banks are fighting to win over new borrowers, so they're keeping lending rates as low as possible, even as their own costs rise. All of these factors combine to squeeze the bank's profit margin. The bank is caught between paying more to savers and not being able to charge much more to borrowers. Even for a giant like NAB, making money from basic banking activities, taking deposits and making loans, is getting harder in this environment. The shrinking core NIM is a clear sign of just how tough and competitive the banking landscape has become in Australia. Banks are under pressure from all sides: customers, competitors, and changing economic conditions. It's something both the bank's management and investors are watching very closely, because it affects not just profits, but also the bank's ability to grow and invest in the future. The easy gains from rising interest rates may be over, and the real challenge now is finding new ways to grow in a world where margins are under constant pressure. For shareholders, dividends are a big deal. NAB declared a final dividend of 85 cents per share, bringing the total for the year to 170. That's a slight increase from last year, a positive sign for investors. Even with flat profits, the bank felt confident enough to boost payouts. This signals leadership's belief in NAB's resilience and strong capital position. For many, especially retirees, this income is crucial. The bank must balance rewarding shareholders with keeping enough capital for growth and safety. By raising the dividend, NAB shows it can do both. It's a vote of confidence in the bank's future. Shareholders get stability, and the bank keeps investing for tomorrow. Like any business, banks have expenses: salaries, rent, tech, and more. In 2025, NAB's operating expenses rose 4.6% to $9.85 billion. Higher personnel costs and big investments in technology drove much of the increase. A notable one-off was a $130 million charge to fix past payroll errors. While painful, it's necessary to do right by employees and comply with the law. Rising costs are a challenge, especially when profits are flat. NAB is working to automate and simplify operations, but must keep investing in people and tech. The expense increase shows how tough it is to balance efficiency with essential spending. Cost control remains a key focus. The bank must keep expenses in check to protect profits. Lending always carries risk. Some borrowers can't repay. To prepare, banks set aside money for potential bad loans, called credit impairment charges. This year, NAB's charge rose 14.4%, signaling more stress among borrowers. It's not a crisis, but the bank is being cautious as risks rise. Most of the increase came from specific business customers facing tougher times. This isn't a broad problem, but it highlights pockets of stress in the business sector. Rising impairment charges are a key economic warning sign. Businesses and households are feeling the pinch from higher costs and rates. While bad debts remain low, the bank is wisely building a bigger buffer. It's a sign of prudent management in uncertain times. NAB is preparing for a potentially bumpier road ahead. NAB's business division is its engine room, generating nearly half its profit. In 2025, business and private banking earnings rose 1.6% to $333 billion. That's a solid result in a flat year overall. Business lending balances grew 9% and deposits rose 7%. This shows businesses trust NAB for both loans and deposits. Despite economic headwinds, many Australian businesses remain resilient. Strong business banking performance is a bright spot for NAB. It's a key driver of the bank's stability and future growth. NAB's CEO, Andrew Irvine, used the annual report to spotlight Australia's housing crisis. He warned that the country isn't building enough homes, falling behind its target of 1.2 million new dwellings by 2029. The shortage is driving up prices and rents, making homeownership harder for many. Irvine called for faster government approvals and more reliable energy to support new construction. Addressing the housing shortage, he argued, is vital for economic growth and easing cost of living pressures. As one of the nation's biggest mortgage lenders, NAB sees the impact firsthand. The CEO's message: solving housing is a national challenge that needs urgent collective action. It's a problem too big for any one group to fix alone. How did the market react to NAB's latest results, and what does it mean for the future? Let's break down the immediate response and the bigger picture. NAB's share price fell 1.5% after the results were announced, even as the broader Australian market managed to rise. This drop signals that investors were not entirely satisfied with what they saw. despite the bank's ongoing profitability. Investors were underwhelmed by flat profits, rising costs, and higher credit impairment charges. The market had hoped for stronger growth or a more optimistic outlook, but instead, concerns about expenses and potential loan losses took center stage. The economic backdrop is also playing a big role. The Reserve Bank has kept interest rates on hold for now, and most analysts don't expect cuts anytime soon. This means the cost of borrowing remains high, affecting both businesses and households. Higher rates help bank margins, allowing NAB to earn more from lending. But they also put significant pressure on borrowers, especially families with mortgages and small businesses with loans. This raises the risk of bad debts if customers struggle to keep up with repayments. NAB now faces a delicate balancing act, managing squeezed margins, rising expenses, and the health of its loan book. The bank must keep costs under control while ensuring it doesn't take on too much risk. On the positive side, NAB's strong business banking division remains a major asset. It's a leader in supporting Australian businesses, which could drive future growth as the economy recovers. In summary, NAB is still a solid and profitable institution, but it's not without its challenges. The bank must navigate a tricky environment of high rates, cautious consumers, and rising costs. Despite these headwinds, NAB remains financially strong and has even increased its dividend, rewarding shareholders and signaling confidence in its future. For customers and investors, this is a period marked by both stability and caution. The bank is steady, but everyone is watching closely for signs of change. As the landscape evolves, NAB appears well equipped for the journey ahead, with a strong foundation and a clear focus on adapting to whatever comes next.